It's about that time of day again. My name is Joseph. It's Thursday evening, February 23rd, 2017. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Now, crude oil looks bearish at first, but one big clue from the moving average is telling us this afternoon's move lower is most likely a pullback rather than a reversal. The S&P is bullish, but a key trend line on the chart is telling us to look for the next buying opportunities after a trap below the lows tomorrow. The gold is bullish, but two big clues on the chart tonight tell us we need to be careful buying here and be ready to buy the next steep pullback off the highs tomorrow. The euro's bullish, and if you missed that beautiful trap low earlier today, not to worry because we have a key trend line on the chart telling us exactly where to be looking next. The FDAX looks bearish at first, but the same pattern from last night's newsletter is telling us that buyers are most likely going to be seeing this recent pullback as a great buying opportunity going back to the highs tomorrow. Ready to wrap up another great week here, get another great newsletter in store for you guys and gals tonight. We've had a fantastic week here. Last newsletter of the week. We don't do them on Friday nights, right? So no newsletter tomorrow night. Before we jump into our charts, though, I do want to remind you as we get ready for Friday's session, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that video. Follow that link. Come join me on the blog here at Sideways Markets and watch the full-length version of our video here on the blog. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our newsletter goes live. Follow me on social. I'm always posting important links and charts throughout the day. Follow me in the lower left-hand corner. Right below the video tonight, you can download all the charts from tonight's video and have those charts ready on your computer for tomorrow. And please don't forget, if you're not a member here at School of Trade, if you're not an advanced member, grab that free pass in the upper right-hand corner. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. And please don't forget, if you're a first timer here to the School of Trade community, we got a great frequently asked questions page on our blog, and I'm always here to help you guys out, right, with any questions you may have along the way. Boy, oh boy, what a great week it's been here. We got one more day tomorrow. Tomorrow's a Friday, February 24th. Let's get ready for this action tomorrow. What do we got coming on tonight? Anything major coming up tonight? Nope, no major news in the overnight session, and that puts us tomorrow into Friday's new home sales. New home sales pretty much the big headline number tomorrow morning. It is a Friday, which always reminds me early in, early out on Friday by 11 a.m. Eastern time. Once they've closed up in London, right, morning session comes to an end in the U.S., that's when volume is expected to drop, and we're expected to see a lot more difficulty in getting consistency from our trade setups. So be aware, Fridays are always the same, early in, early out. Once you start seeing that volume tail off, right, you know it's time to pack things up and hit the weekend. I always have a rule of no new positions on after 11 a.m. on Friday morning, right? You're more than welcome to hold positions open, right, if you want to be very careful, though, after 11 a.m. on Friday. Only major news tomorrow. I'm not going to worry about the CPI from our friends up north, but I'm going to be watching that 10 o'clock new home sales number. 10 a.m. is usually a pretty active time of the day to begin with, and when you put in a very, very important news number like that new home sales, it's a big, big leading indicator of the overall health of the economy here in the U.S., and everyone will be watching. So look out for the fireworks tomorrow across all the markets during that new home sales report. And again, anytime around 10 a.m., right, we're always watching for those top of the hour tradable opportunities at 10 a.m. So be aware, early in, early out tomorrow. Watch that news number. And please don't forget, right, we're going to go over the plan here for tomorrow, but we'll be doing this all together with our students tomorrow in real time, starting at 8 o'clock Eastern time in our trade room. Look forward to seeing you guys there with us. Let's jump right in here. Crude is bullish and pulling back off today's high with a great example of how we can use the moving average to define who really controls this market. Looking at the move higher this morning, we can easily see the clear separation from the moving average as the buyers raced higher, right, to achieve a short-term measured move. Later in the day, though, as the market pulled back off those highs, you can see that price appears to be stuck around the moving average, unable to get that same separation, which is a big clue this pullback is most likely just a pullback and not a full reversal. Buyers looking for traps below 54.23 3 and a successful breakout pullback above the triangle for buying opportunities tomorrow, well, the sellers can take control if they show us some strength pushing lower. What a great chart here tonight. At first, at first glance, just kind of looking at it here tonight, we're kind of right in the middle of this range, right? It's kind of a coin toss, right? Are we bullish? Are we bearish? And that's a great way of thinking of it. Whenever we have a coin toss or whenever we look at a market, we say, boy, this could go either direction. I always give the benefit of the doubt to who had control first. And here's where we can always use that moving average. One of the many ways in which we use the moving average is to help identify who has control and who has taken control. For example, we started off the day today in a very strong bull trend. We spent the day today in our trade room looking for pullbacks, right, traps and failures, right, for buying opportunities. Now, look at how the market just races higher, right? Look at how the separation between the price and the moving average, right? This is really a simple way to use the moving average to tell you. Now, when I see that much separation, and I don't think there was any doubt about this today, right? It was a bull market all day today. But what I'm getting at is look at the way the market reacts going higher. Look at how much space you could drive a milk truck right between that moving average and the candlesticks. I think they still have milk trucks around here these days. But the bottom line is good separation, right? Not a surprise here. Anytime we see a real strong move, we know, of course, the next time they pull back to the moving average, they're probably going to buy it up, and their objective is to retest the high, right? Remember, that's the objective always on a pullback, is to retest that high. So the bulls got what they were looking for, right? The bulls got it, right? They got their channel, right? To pull back to the moving average to retest that high. Boom. Very easy. Now, at this point, here's where the moving average really comes into play. Think about how the market went higher, right? Really runs higher, great separation above the moving average. Now look as we go lower. Are we seeing the same type of separation as we go lower? No, we're definitely not, are we? Right? We're not seeing this market race lower. It could have. There's no reason why it can't, right? But it didn't, right? We didn't see the same type of separation. We didn't see the same situation going lower. And so with that said, the buyers took control early in the day. The sellers have what we call the burden of proof, right? We talk about this in our trade room all the time, right? If the buyers take control, they have the benefit of the doubt. The bears have the burden of proof. They have to prove to us that they really want to control this market. On the way up, the buyers are clearly in control. The bears are leaving us a little bit light on the strength to the downside, and because of that, one simple way to use the moving average to tell us right now that we're still looking for buying opportunities. Now, with that said, you might recognize this from last night's newsletter, right? Where are we, right? We're in a triangle. What is a triangle? A triangle is nothing more than a trading range, right? That's all it is, right? So we mark up the highs, we mark the lows, and we now know that buyers are looking for that trap low and back up. This is where all the gutsy buyers are going to be trading tomorrow, right? This is where all the gutsy buyers will be trading, right? They'll have their orders stacked up right below that low, thinking, you know what? If I take a little bit of risk on this, I have a big reward waiting for me if I'm right. That's what the gutsy buyers will be waiting here tomorrow, looking for that little trap low below that trading range. Where else? Where else can those buyers be looking? Breakout pullback. Now remember those breakout pullbacks, right? Whenever we talk about breaking out of a range, what happens when range breakouts? Yeah, most of them fail, right? Again, we talked about this in last night's newsletter. We've actually been talking about this particular topic, right, all week here. So we know that most ranges fail, which is why that little trap low for the buyers, right, is a gutsy but very good idea, right, for a big reward and a small amount of risk. From there, now we got to be careful about sellers trying to fade that move. We're going to talk more about that in the sellers in just a moment, so stay tuned for that. But the reality, though, is I'm expecting sellers right now to sell this market back down into that range, and we're going to want to play right along with them, right? So that first breakout pullback likely will fail. Trap low, we call the old okey doke, right? The old fake out breakout pullback, right? Using that range, right, as our guide. So those are going to be the two areas where you're going to want to be looking for those buying opportunities, right? The gutsy move at the bottom of that range, knowing the bears don't have control yet, and basically telling them, I don't believe you. And then, of course, strong move through the high, right? Strong move through the high, get that moving average up, right? And look for that breakout pullback, that little fake out breakout pullback through those range highs. Now, I'm sure we have some bears out there right now shaking their head right now going, this guy's crazy. What are you talking about? Right? This is a bear move into a triangle. I want to sell it. First of all, right, if you're a bear on this right now, you want to be very, very careful selling that breakout, right? So same thing pretty much applies to the bears. Personally here, if I'm going to be a seller, I'm looking right up here. Same thing, right? It's not as gutsy as the buyers, right, buying the low of that range, but this is where those sellers, and this is ultimately where I think you're going to get probably the best clue here tomorrow if this thing does turn bearish. Remember, if it just runs higher here, right, we'll know. If it runs higher, we'll know that little fake out, breakout, pullback, right, will be a great idea to be a buyer. But if it pokes its head out, right, there's that range. If it pokes its head out here, and immediately gets slapped right back down again, that's going to tell you right away, if you can see some strength on the opposite side, right, then we can go looking to the downside. So as we're looking at this right now, we know sellers are going to be looking for this price to go up, buyer failure, trap high for the sell back down, right? We talked about that earlier. That's why I like to look for that trap, right, and then buy the second one, right, not the first one, because sellers will be looking for those buyers to try and fail to sell that market down, right? So keep an eye on that if you're a seller and a buyer, right, on both sides of that market. And of course, don't forget, as we go lower here now, this is where you want to watch for that fake out breakout, right? This is where you want to watch for that fake out breakout. That's the next one right there. Because again, right, those gutsy buyers are going to be sitting there going, just give me a chance to buy a low, just give me a chance to buy a low, and they'll buy the low, right, of that range until we get some strength. The real big thing for the bears would be a run very strong, right? If we see a run right through that low, there'll be no question about it, right? We now have proof, and we'll now go looking for, right, a larger channel, a larger measured move, right, and we'll play that, right? We'll play that game going back in the opposite direction. Right now, the buyers have control. There's no reason for me to be thinking about being a seller right now. Trap low, little fake out, breakout, pullback above those highs. And of course, the objective right now is up to that high of day. If we do get up to the high of day, watch for clues. If we go up, pull back, and then go. Be careful buying into the high if you see profit taking at the high. But if we roll up, breakout, pullback, and run through, then we can start looking for, right, that pullback up to the measured move. The measured move is the ultimate objective tomorrow, but obviously going back to retest the high is the short-term objective. Goal number one, get back to retest the high. Goal number two, see what happens, right? Do we break out, pull back, and go from there, or do we pull back, right, and go for a retest of that high? We see this a lot where price will go up, get that high, pull back up again, and then you're playing that game where you've got that trading range and you're just trying to buy low, right? If you see everybody jumping out of their positions at the high of day, you now know they got their objective. Now wait for it to pull back. But if it runs right through the high of day, like a hot knife through butter, then you know they're hunting for that measured move, and we'll continue from there. Really, really great chart. And I think, again, one very good example of how we use that moving average, right? Moving average in a lot of different ways. Like I always say, if you know how to use the tools on your chart, you don't need a million tools, right? You don't need to overcomplicate it. You just need to understand how these markets work. Again, those bears out there, you show me a strong trap high or a real strong move through that low, I'll gladly give the bears control, but they got to prove it to me first. Let's keep going here over to the S&P. The S&P is bullish and trade with a triangle this evening, which tells us to look for buying opportunities below the low of this triangle or after a successful breakout pullback above the highs. Buyers will find it easy to find trading opportunities if price pulls lower, but if price tries to poke through the highs, we got to beware trying to buy into those highs. So our plan is to use the triangle and look for a trap below this low. As you can see right now, another great example we talked about in last night's newsletter. The day starts off relatively bearish here, right? Starts off relatively bearish here, but you can see though, great example, right? Bears, right? Bears have good control here on the way down, but look what happens. Nice separation. Buyers hold the pullback. Nice separation. got to give that back to the buyers, right? Got to give it to the buyers. If we see a strong move back above that trend line and we hold that pullback, right, and we close higher, right, we got to give the control back now to the buyers. Separation below the moving